We've had Jyothy Labs that delivered its Q1 numbers, healthy numbers in a disruptive quarter, mind you. There's also the strong growth that we've witnessed in the household insecticide segment. So let's bring on board the management of Jyothy Labs to talk about the numbers. Mr. Ullas Kamath, the joint MD, now joins us. Thank you, Mr. Kamath, for joining in today on ET Now. Despite the fact that it was a challenging quarter, your numbers and your performance has been pretty good. But some of your peers have flagged of the impact of localized lockdowns on the operations and consumer sentiment. Has it been the same for you as well? How has demand been also now that we've unlocked in the month of July?
In fact, the last quarter has been absolutely execution-driven quarter for us, and portfolio agility. What we have, 85% of our business is completely on a health and hygiene platform, and we did flawless execution in the marketplace, and a bit of financial prudence together got us like a good resilient results. Coming to your question, it's purely the consumption in the marketplace is always there at the consumer household, and especially when they are at home, the usage of products, some of the products have gone double-digit higher. For example, they're cooking food at home, and washing of the utensils is much more than what it was before. And people are again working from home. The category has grown, dishwash segment category has grown. Similarly, people are washing clothes much more than before because of the fear of the COVID. And when they go out, they come back and they put for wash. To that extent, it was more like managing the supply till their household rather than like demand. So in our case, we opened our factories as early as April 10th, 11th, once we got the permission, and stocks were available at the warehouses, and we were able to get the permission of the government and get it executed very quickly. And most of our supplies to the retail outlets have happened between morning 6 o'clock to 11 o'clock, and thereafter the sales people have gone back home. To that extent, I would say that the demand is still there. Some of the pockets are getting affected, but it is only from the point of view of people not getting into that place and not coming out. But the supply of essentials always happened, even in a containment zone also, with the police and health workers. It has happened. So to that extent, it's just that execution has made us to give a robust result of the last quarter.
So your margins as well have expanded, and what aided it was also the lower ad spends. So what's the cost strategy like going ahead, and any margins you're targeting or hoping to achieve in this fiscal?
Yeah, one is that the gross margin reduction by about 200 bps is primarily because of the post-wash segment is declined a bit. That's because people, when they're working from home and they're not going for like outside, and they're not wearing office dress. To that extent, post-wash is affected across the industry. And July has been, is better than June. And to that extent, I'm hopeful that the post-wash also come into the picture in the coming quarters. After the unlock one, we have seen some kind of a momentum and a positive. And as far as the gross margin is concerned, we'll be able to go back to our 48% gross margin probably in a couple of quarters because raw material price is very soft, and more or less it's I would say nearer to all-time low. So to that extent, we're able to manage the gross margin. Coming to advertisement, we have purely gone on need-based advertisement, and we continue to spend money on advertisement. In the coming quarter, probably we'll negotiate better than what we are spending last quarter because we are in unlock 2.0. To that extent, advertisement spend will be more, but we'll be able to manage the EBITDA margin very comfortably between 15 and 16%, even though we are at about 17.7% now. But I'm comfortable that we'll try to do much better, but entire year we'll be able to manage around 15 to 16%, despite the uncertainties what we see in the coming quarters.
Okay, your household insecticide segment did really well. There was perhaps a preventive approach adopted by customers, not to mention since everyone was working from home, HI is a product that sort of contributes to a good working environment as well from home. So do you think this high demand is sustainable? I mean, what are the trends being witnessed in July?
Overall, I see that the household insecticides as a category might grow about 10 to 15% for the current year, but the huge growth what you have seen in this particular quarter, 151%, is primarily because you know that the lockdown was announced on 24th of March, and the last week we are not able to sell anything in the household insecticides. So whatever the stock we had, it was built in the month of April. To that extent, it is a shift from the last week of March sales to April. And the season is generally starts from February. It will go till May. But this time, because of the extended, I would say that is a monsoon and a very good monsoon across. Adding to that, people are fearing going to the hospital, whether it's for malaria, dengue, chikungunya, or just a fever. Also, people just don't want to go to the hospital. I mean, this is with everybody. As you rightly said, as a preventive measure, people are using the mosquito repellent much more than what it was before. And also, during the same time, we also saw the decline in spurious incense sticks, which used to bother all of us in the organized industry. They were not able to manage during the COVID debt production. So that also crippled, and that helped us organized players to sell more. And going forward, I personally feel that this category will get that booster now, 10 to 15% growth, what I expect in the current year, and that will continue. So to that extent, we are in a good position.
All right. Mr. Kamath, fabric care, which is around 40% of your sales, unfortunately, was under pressure. Now, as we are, sort of unlocking, maybe hope is that we are moving towards sort of a normal, maybe a different kind of normal. Are you seeing any demand revival?
Probably September quarter, you probably will see near normal, and the December quarter will be normal because the problem what we right now, all of us we have is modern trade is not as good as it used to be in the past, especially in the large format stores. So it's not opened yet. In the malls, the modern trades are not open yet, and canteen stores department is a big buyer of FMCG products, especially detergents. They are not near normal yet. So to that extent, it is affected. But general trade, which has taken most of the business from modern trade and CSD during this pandemic, they are doing extremely well. Coming to your question, according to me, September, December, the normalcy will set in for sure.
Okay, rural is growing faster than urban, and you do have quite a good rural presence. So give us a sense about demand that you are witnessing over there. What's the growth? And do you think this trend is here to stay for the next few quarters?
For us, both urban and rural are growing, but rural growth has been definitely much better than the urban growth. Reasons could be three. One is that the government is spending a lot of money for rural growth and social sector, and a lot of money in direct transfers have gone in, 1,80,000 crore budget to what it was there, and most of it has gone to the needy people in the rural India, and some of it will come to FMCG. And also, government has given a ration for most of the households in the rural India committed till October, November. To that extent, the money available will again come to FMCG. That's point number two. Point number three, there's the migrant workers who have gone there, who have used to use the kind of FMCG products what they've seen in urban India. Actually, they'll also start buying there. And the last one is that, like this time we see MSP has been great, and agriculture production is also good. To that extent, is overall, like all-time increase what we are seeing now, and whether it will sustain, according to me, it should, because farmers' income has to double in the coming years. That's what the government aspiration is, and overall, according to me, it is what I'm seeing is that Manrega program, direct transfers, all this happening. We are seeing what we saw in 2004, 5, and 2008, 9 kind of a situation, and growth engine for FMCG in the current year and probably a couple of years coming will be the rural, because 70% of the people live in rural, and we can't afford to ignore their needs and aspirations.
With rural bucking the trend, will you be focusing on producing more low unit packs? Are you looking at any rural specific innovations? And what's your strategy to drive more sales?
Yeah, and I think this is one of the reason why we were able to execute our plan very well in the rural market. We have gone in immediately with the 5 rupee pack, 10 rupee pack, and 20 rupee pack, and that's how you see that volume we are at 6.1, whereas value is at 4%. The difference is mainly because of like smaller SKUs. We are driving the volume. And rural India, down trading is happening in SKUs. They are not shifting the brand at this point in time. That's a good news to be in, good position to be in. But they are going for smaller SKUs. People are used to buy 500 grams, they're buying for 250 grams. People are buying 100 rupee pack, they're buying now 10 rupee pack. So as long as you are able to meet that demand and the service, maybe on a weekly basis, what we're doing, and we appointed many sub-stockists in small rural India. So we are able to meet the demand of the consumer through the sub-stockists till the last mile. And they are extremely happy to buy 5 rupee, 10 rupee, 20 rupee product. Being in the same brand. And now you see in EXO, we have a 5 rupee pack. Margo, we have a 10 rupee pack. To that extent, consumers are happy and they buy smaller SKUs. Whereas in urban India, they want a higher packs, as I told you, that they don't want to stand in the queue once again. So people are going from 1 kilo to 3 kilo, people are going from 500 grams to 1 kilo. So you need to cater to the need and the demand as it is required. And because we have 27 factories in 17 locations, it's easier for us to manufacture the needs of the consumer and supply immediately to the market. That's where we scored better sales during this pandemic.